Live with the mortgage calculator. We're going to go through some live mortgage rates here today and do a deep dive into Condotel Loans. We'll wait just a couple of minutes here to go live on all the different platforms. We did put the chat up on the screen, so feel free to drop a comment there in the chat. See some people already commenting. Appreciate that. Go ahead and drop your comments there while we wait to get started. Hope everybody has been having a good week. Thank you for the comments coming in there. Owen, Michael, Adam, appreciate it. Bob, appreciate the comment. Everybody tuning in. Nice and early. All right, Warren, appreciate the comment. So it looks like we are live on all the different platforms. We can go ahead and get started. As you tune in, please keep dropping comments there. Let us know you're tuning in, and feel free to drop any questions you have as well as we go through the presentation here. So welcome everyone. My name is Kyle Hershey. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do here on this show every day is go through the live mortgage rates for today, and then we do a deep dive into a different topic. Today's topic is going to be Condotels. Now, because we specialize in non-QM and investor loans, this is a situation that we run into a lot here at the Mortgage Calculator. So Jose, our sales manager with 28 years of experience, is going to do a more in-depth breakdown into Condotels here shortly. But before we do that, let's do what we do every morning, which is go ahead and pull up our pricing tool and see what the rates are today. So Nick, if you're ready, let's go ahead and pull up the pricer and see what the market is looking like this morning.
All right, let me switch my screen and we will check it out. So this is our pricing tool for our team of mortgage professionals. This will show us the general rates and the APR for today. It is October 4th, just after 11 a.m. Eastern. So all of our standard programs have live rates here. If you'd like to get a full breakdown, a full loan estimate with all the itemized fees, please get with one of our team members. We have over 400 licensed loan officers in 24 states for primary homes, and we can do our business purpose loans in 44 states. So as we do every morning, we'll set up a basic scenario so we can compare APRs across the different loan programs. We'll set all of our demos to a $400,000 loan amount. We'll set the LTV to 80% loan, 20% down payment. We'll set the desired price to 99. That means we're going to ask the computer to find the best rate at one discount point in cost, which is a typical request. And we'll compare for primary first, conforming. Then we'll check out FHA. Then we'll go into expanded guidelines, also known as non-QM, where we have over 5,000 additional loan programs. We also have VA and USDA. Remember, VA is only for eligible vets and active service members. If you are eligible, let us know. We can quote it in a couple clicks. And same thing with USDA, that's only for eligible properties. But if you are shopping in those areas, let us know. We can quote it in just a couple clicks. Conforming conventional is what we'll start with. We'll do a purchase, 30-year fixed loan, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated credit score of 760 and an estimated debt to income ratio of 40%. So with these settings, as we do every morning, let's check out the conventional options. Yeah, not much better than it was yesterday. Actually, a little bit worse here. For some reason, a non-QM option's popping up. So let's look at the first conventional option here. When the rates go a little crazy, sometimes the computer goes a little bit crazy there. Best option here, 7.875 rate, 0.75 discount points, and the dreaded 8% APR is now a reality. So with the recent, I guess you would say, negative news, unfortunately the rates have been rising pretty steadily here, and we're now approaching the 8% APR. Now, if for any reason our customer doesn't qualify for conventional, typically the next option we want to check out is an FHA option. FHA does allow a little more leniency on credit issues, as well as a much higher debt to income ratio. But for the demo here, we'll keep everything exactly the same so we can compare apples to apples across the programs. So let's see if FHA is still under the dreaded 8%. All right. Some weird options here. Rates are just going crazy these days. So computer found a strange option here with pretty expensive, but it ends up being cheaper here. But 7% rate, 2.89 discount points in cost, but puts our final APR at 7.657. So beating conventional by about half a point today if our customer qualifies for both. Our customer that must use FHA, definitely good news, as it is actually cheaper in this example here by quite a bit, even though FHA does include the upfront and yearly mortgage insurance. Now, where we really love to specialize and hopefully have some good results today, especially with the conventional programs going crazy, is if our customer doesn't qualify for conventional or FHA, many other banks or lenders will have to deny that customer. But fortunately, here at the Mortgage Calculator, we have over 5,000 other options beyond the standard. So when we click Expanded Guidelines, also known as non-QM, set up the same exact scenario, but a new option pops up for income verification, where we can use alternative income. Full doc is what we use for FHA. Conventional, that's 2 years of tax returns. So we'll typically choose the non-QM options to take advantage of one of these alternates. Asset-related programs, business bank statement programs, investor programs, or just for investment properties. We'll talk about that shortly. Personal bank statement 12-month is the one we always use for the demo. That's the most popular program. We even have RSU, stated income, VOE, 1099, P&L, no income CDFI, all the options here. But we will use personal bank statement 12-month, and that's for our self-employed borrowers. Many times it's our self-employed borrowers when they apply with 2 years of tax returns, have various write-offs, and may not qualify at all for anything, or just may not quite get enough income for what they really want. And we will solve that problem by using no tax returns at all, just their last 12 bank statements, to determine a debt-to-income ratio of 40% in this example, using no tax return, just the cash in the bank. So most of our self-employed borrowers will qualify for double, triple, or more income using these methods and can therefore get that home they really want. So let's check out the bank statement options this morning. Hopefully we beat conventional. Wow, 2 programs beating conventional. So when conventional goes crazy, non-QM pretty much stays the same, and today it's actually cheaper. Amazing. We have 2 bank statement options cheaper than conventional, almost 3. This one also right there at 8.1 is almost identical to conventional. So right now in this market, non-QM is definitely showing some strengths. Best option here at the top, 7.5 rate. Pretty expensive here, 3.625 discount points in cost, but it still puts our APR at 7.654, which is pretty amazing and really beats conventional standard rates by a long shot here today. So definitely check out these programs if you are looking for a conventional loan. Definitely compare the non-QM options. We actually might be able to beat it in a few scenarios here. Now, before we go into Jose's example for Condotels, we always want to do some live pricing for investment properties. So we'll do our final 2 examples here for an investment property. Set up the same scenario, 80 LTV, 20% down payment. And we'll compare our 2 options here. We have conventional options, conforming, and then we have our expanded guidelines, also known as non-QM. We do not have FHA, VA, or USDA. Remember, government programs are not eligible for investments. So we'll simply compare these 2. So conforming conventional first, everything's staying exactly the same. All we've changed is the occupancy to investment. So let's see what the conventional programs have added for investments. Not bad. I think they haven't updated some of these programs here, but 7.875 rate for 3.875 discount points in cost. Puts our final APR at 8.138. So actually pretty comparable to the primary there today, but I think they need to update these programs here. But if we're looking to save our borrower, our investor in this case, some cash out of pocket, 3.875 points is pretty expensive. That's $15,500. Unfortunately, there aren't any conventional examples, especially right now with the rates rising. For example, this one it wouldn't even be legal. $20,000 here in this example, a lot of crazy numbers. So most of our investors request a different quote, and that's where we can check out our non-QM options to get a more reasonable cost for our investors. So for the final demo, we'll set up the same thing, ADLTV, investment property, and this time we'll choose expanded guidelines, also known as non-QM. Now, the first thing we need to select is our income option. The most popular income option for an investment property under non-QM is our DSCR option. That's because it doesn't actually require any income or employment info from our borrower. Simply use the estimated rental income from the property to determine a DSCR value. It stands for debt service coverage ratio. If the estimated rents can cover the expenses, the PITIA of the mortgage, that means the property cash flows on a monthly basis. That's a ratio of 1.0 or higher. We have options even if the ratio is under 1.0 where the property does not cash flow on a monthly basis. But for the demo, we always put 1.5, which is the highest value the computer accepts, so we can see all the options pop up. And finally, a prepayment penalty. 3 years is what we always set here. That is standard for a non-QM investment. We can select 0. That will limit the amount of loan programs that show up. And we can select 5. That will also limit the amount of loan programs that show up. So we always select 3 years to show the more standard example. So let's check out the DSCR options this morning. And the best option here at the top, probably right there with conventional today, once they update, 8.375 rate, 0.725 discount points and costs. So obviously much less discount points, $2,900, much more reasonable for our investors. And a final APR of 8.433. So almost identical to conventional, but we've solved our borrower's problem with massive amounts of cash out of pocket required. So definitely recommend our investors check out the non-QM options, especially the DSCR options we're pulling up here. And if we scroll down this list, there's dozens of different options. Some of these at a little bit higher rates and costs may allow things like foreclosures, bankruptcies to get around other guideline issues. Some of these may allow short-term rental income to be used. And to segue into our topic for today, some of these may allow Condotels, which are a specific type of investment property. So we can't really do that live on the show, but let me go ahead and switch my screen here. And we can introduce Jose's deep dive topic for today, where he's put together some of our DSCR and other options that work for Condotel loans. So I'll let Jose probably talk a little bit more about this because Condotels are pretty tricky. They're very specific. Remember, we've done a couple trainings on these in the past as well, but there's a very specific definition, right? It's obviously a condo, and it obviously has hotel aspects, right? When those come together for each program and each investor are similar, but not always identical, right? So there's some features to look for, some features to look out for, and obviously once you're in the condotel bucket of where that property is going to be treated as a condotel, these are the options that you can use. None of these standard financing options will be available, not conventional or any of the standard stuff you're used to. So these are pretty unique loan programs under a non-QM that do allow condotels, including DSCR, and probably a couple other options if Jose has them. So if you're ready, Jose, why don't you first define it a little better, and then let's go into the examples.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Great to be with you this morning. Condotel properties are a very unique segment of the market. In South Florida, we happen to have quite a few condotels because, as you would expect, these properties are usually located in resort or vacation type areas, right? Areas where short-term rentals are prevalent. Condotels were the original short-term rental type properties before short-term rentals became a thing in other condos that are not condotels but do allow short-term rentals. So you really have to make a distinction between the two. Just because a condo allows legally now, not because somebody's bootlegging it, but because it legally allows in its bylaws short-term rentals, does not mean that it is a condotel. Condotels have certain regulations that make their occupancy by the owners more restrictive, which is one of the reasons why financing is more restrictive. Condotels tend to limit the time that an owner can occupy the property in any given calendar year because the condo wants to take advantage of the revenue earned by that unit, which is also usually required to be in the quote unquote hotel program if the owner wants to take advantage of the short term rental or hotel component. They Condotels usually will not allow the owner then to run their short term rental business on their own. They could own the property, but they cannot rent it out unless the property is participating in the hotel program. That's one of the reasons why that and the occupancy by the owner is the two main reasons that the financing is more restricted. And on top of that, condotels usually tend to be non-warrantable condos on top of everything else because of the nature of their existence. Right, they are primarily for short-term rental occupancy. They're not meant to be occupied by a majority of owners as a primary or a second home at any given time. They're really geared more towards more tenants, if you want to call them tenants, um, rather than occupancy by owners. Hence, definitely going to be non-warrantable. If you send them a full review condo questionnaire, and they may say that only 5% of the owners live there, but it probably would have to be 0% because if most condotels have like a 6 month maximum time in any calendar year. Some say no more than 30 consecutive days. So you really have to read the bylaws of that condotel to see what it is. So hence, condotel financing very tricky. So you will see some reduced LTVs even at full doc compared to regular financing. So very important when you are sizing up your condo deal and there is a short-term rental component that you ensure what you're dealing with. You're either actually dealing with a condotel or you're dealing with a condo that simply allows short-term rentals. Condotels also another telltale feature of a condotel will be a front desk for checking in arriving guests. Right, that's the hotel component of the condotel. So they do have that front desk. That's another big giveaway. And some of them even have in the legal description hotel, or their zoning may even be that of hotel. So those are all things that the appraiser will look at when they are categorizing your property either as just a condo that allows short-term rentals or a condotel. And that's the kind of upfront vetting that every MLO should do if they have any doubts on if the property is a condotel or just a condo that allows short-term rentals. So I have some purchase examples for you here and a refi example as well. So let's get into all of our income streams that we can do for a condotel. So here, our first option, very limited, but we did find a condotel.
Can you zoom in a little, Jose? I think it's zoomed
Sure.
out.
Okay, let me get it a little bit bigger.
There,
All right.
yeah, much better.
So this is an 80% primary purchase of a condotel. This was the highest LTV that I found, only one option, and basically they only had one compliant rate, right? So we were looking at 9.5% at a cost of 2.375 points for our primary purchase of a condotel. Now, that was a full doc option. Now, here we have some alt doc options. Again, we're going primary here, but instead of full doc, we are going bank statements. And we have pretty good rates here now that we are at a 75%. You'll see that we have a par option at 8.75%. and you can buy that down all the way to 7.625%. So when you consider this is an investment property, Condotel bank statements, these are amazing rates, especially after seeing those agency rates I just saw today. I'm more convinced. So now here is our P&L option. So the good thing is here, all of the income, alt doc income options, bank statement, um, P&L will have the same rate. So here, 8.75 at par, you can buy that down all the way to 7.625 for our P&L option. And we even have a 1099 option. And again, look at those rates. So the alt doc is going to be the same rate all the way across for this particular option. So again, 8.75 is at par, 7.625. Here, I'll click here so you guys can see the points. 7.625 is our lowest rate option. So now we have some investment Condotel options. So this one here, full doc, 75% LTV is the maximum LTV on our investment Condotel. So we're looking at 8.875, has a little bit of a lender credit there. And 8% is our lowest rate option. So our investment bank statement option, again, as occurred here, we similar rates. 9% is par, 8% is our lowest rate option, and our P&L got this is a little bit lower on the lowest rate option, and 9.125 is at par. So, these are different conduits, so obviously they are all not going to have the same rates. And this one again was for our P&L. 1099 investment, again, same rate that you just saw on the P&L, and on the 1099, 9.125 is our lowest cost option, and you can buy that down to 7.5%. So now DSCR. So if there was enough things stacked up against you, now we're going DSCR, but I want everybody to note, look at the rates. This is again 75% LTV, and the rates are actually a little bit better, right? 8.75 is at par, 7.5% lowest rate option. And that's really because the DSCR and all of the investment property loans are really more in line with what a condotel is, right? It's an investment property primarily meant for non-owner occupied. And in this case, it would be 100% investment occupied here, but 8.75 is a darn good rate at par for a condotel at 75% LTV. And last but not least, our DSCR, we actually have a 75% LTV cash out DSCR option condotel. Well, that's a mouthful. I'm sure I'd have a few more options if I was at 70, but our investors always wanted to know what's the maximum LTV so they can max out their leverage and maybe, get two properties instead of one, stuff like that. So here, 9% is our lowest cost option, 8.75 our lowest rate option.
All right. Surprisingly, there's no questions, but a lot going on there, right? I think the big takeaway here for loan officers today is to be careful of what they're doing there. There is a question that just came in: do Condotels always have a front desk?
I would not say always, but usually they usually do.
It's a dead giveaway if there is, right?
Yeah, correct.
All right. I don't see any other questions. So I think we can wrap it up here. Remember, we do this at 11 a.m. Eastern every single weekday where we go through the live rates and do a deep dive into a different topic. So we have a new topic coming up for tomorrow. We appreciate everybody tuning in. Thank you, Nick. Thank you, Jose. And we will see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.